Good morning again to everyone and welcome. I'm Yvonne Schwab, ACG Silicon Valley CEO. I am very excited to present you today's C-Circle on trends in venture capital post-pandemic. For those of you new to ACG Silicon Valley, we are the leading business-to-business networking organization in Silicon Valley, providing connections, thought leadership, and enabling personal and organizational growth. We're part of a worldwide organization, ACG, offering an array of networking opportunities with 14,000 members in 59 chapters across the world. Our chapter, ACG Silicon Valley, is offering a variety of events in the coming months. Next Wednesday, we are hosting a virtual networking happy hour. Please join us. These are always fun and engaging. It's a great way to mingle with fellow members of our ACG community from the comfort of your home or office, if you're still there. Or there again, I should say. April 25th through the 27th, we have the ACG-wide Intergrowth, the premier deal-making conference in the middle market. Join us in Las Vegas. It's going to be an extraordinary event. On April 27th, we have another ACG chapter e-lunch, California chapter e-lunch. On May 5th, we have a collaboration event with Next Step titled Life 3.0 in the Metaverse, Leveraging People, Web 3.0, AI, and DAOs for Success. On May 11th, our M&A Circle is hosting part one of a two-part series titled From C-Suite to Board, Value Creation and Capture Throughout the M&A Process. We invite you to visit our website, ACGSV.org, to see the full calendar. Now, I would like to introduce you to our moderator today, Sean Flynn, principal at Global Capital Markets. He started as a business owner, founding and growing a successful company in Beijing, China, before returning to the US to work with companies ranging from fast-growing Silicon Valley startups to established overseas public companies. And he is also the host of the award-winning podcast, the Silicon Valley Podcast. Now, without further ado, Sean.
Yvonne, thank you for giving me the opportunity to be the moderator on today's event. First, I also want to thank Andy Armstrong for organizing, working with me on collaboration for this event. So Andrew, thank you for helping out. And I also want to thank everyone here in attendance. I see so many familiar faces, Kimberly, Herman, Chris, thanks everyone for attending this event. It's going to be fantastic. So to start the event, I'd really like the audience to know a little bit of background on the panel. So can we go around the panel just one by one and give an introduction of your career, kind of what you're working on a little bit more so the audience can connect with what you're doing up to this point. So Jeep, would you like to go first?
I can see lady first here, thank you. Nice to meet everyone here. I also know some of the audience, so small world. Welcome. I am Jeep Klein and I was trained as an economist. My first role was an economist at the World Bank in Washington, DC. And then I moved my way from the East Coast to the West Coast, starting my technology industry journey, starting at Intel for 7 years, working in big enterprise and startup company. And currently I'm wearing multiple hats. I'm a professional faculty, teaching impact venture capital class at UC Berkeley High School of Business. I'm also a founding partner at a venture capital fund investing in emerging markets, starting in Latin America, and sitting on a few board roles as well around ESG and also climate.
Jeep, thank you for that intro. Yvonne, could you please go next?
Sure, the other Yvonne here. And thanks for having me in the first place. So my name is Yvonne Lutsch. I'm currently working for RBVC, that's short for Robert Bosch Venture Capital. So that's the corporate venture capital arm of the Bosch Corporation. And I started my professional career at Bosch in Germany 20 years ago in several executive roles in quality management, engineering, and production, very operational. And then I came to US 6 years ago and they told me do something with innovation. You know, there are all these startups, and I came here and I was completely blown away, and I decided not to go back to Germany anytime soon. And then I became a venture capitalist because I wanted to be in the startup ecosystem as much as possible. And I truly enjoy it here. I was trained as a physicist a long time ago, which was a little bit helpful for some deals in quantum computing.
Fantastic. Peter, please round out the introductions.
Yeah, hi, my name is Peter Shima. I am based in Prague, center of Europe, so basically far, far away from you right now. I spent 25 years of my career running my consulting firm, doing M&A and corporate finance, advising SMEs. And last more than 5 years, I am CEO of Depot Ventures. We run angel funds, angel syndicates, invest in seed, pre-seed, and basically try to educate investors in our part of Europe. Must say that the situation in early stage investors is much different from California.
Right. And as our audience and our attendees can tell, the panel itself, I mean, just listen to this diverse background from VC professor at UC Berkeley to working with a big corporation, trained in physics, to Angel Group, runs syndicates global. So with that, at the very end of this event, we're going to open up for Q&A for about 15 minutes. So please write down, keep in mind any questions you want to ask our panelists throughout this entire event. If you want to make notes or make comments in the chat, please go ahead. But remember that at the very end, we are going to have a good portion of the time allocated for Q&A. So with that, for our panelists, let's just dive right into, a pretty good question for everyone to set up the rest of the event. What lessons do you think investors have learned during the pandemic? Who would like to start? Yvonne.
I can start, yes, of course. So interestingly, after the first shock, where we all thought, the world is going under and our startups are dying together with us, we realized that many of the startups are very resilient against the pandemic, and that technology was actually already there to mitigate most of the issues we were facing, like personal meetings. There was Zoom, there were Teams, there was, even phone calls, very old school. So we could actually just continue doing what we always did, even with much more efficiency, which led to much faster and much higher density in deals. This was and still is insane, but I would say like a year ago, it was really insane. People were closing deals. They were formerly closing maybe in weeks or months, in days, because of the efficiency increase. This was actually puzzling and mind-blowing, and I think none of us was anticipating this before.
Peter, Jeep, would you like to add to that? Jeep.
Yeah, I would love to, and I agree. I also would like to add a few things. So number one, the trends that I've seen in the last couple of years, that it was really pronounced. If you look at the industry in terms of verticals and sectors, right? What do we have to do in a society so that people can sustain their life throughout the lockdown and the pandemic? And the two sectors that I've seen that coming up really fast and can deploy technology is EdTech and health tech. And I would like to give one specific example on EdTech. So it just happened that my fund, which is an impact VC fund investing in Latin America, there was a company that I invest in, women founders, 2 women in Peru. And they came and pitched to my fund. They said that, look, right now we are in the beginning of the lockdown. People lose their jobs, and especially at people at the bottom of the pyramid, the low income population. They used to drive taxi cab. They couldn't have that job anymore. And they were impacted the most compared to the top of the pyramid, right? How can we help them? So this company actually created we call reskill and upskill for these population to come and take classes for 3 to 4 months, become a developer. We are talking about low-level developer, right? So startup actually help place them, it's free, and help place them in the job market. And they make, 3x the wage rate compared to driving taxi, and they liked it. They come back and then take another class to become mid-level developer. And then they place them in the job market again. And the startup company take a small percentage of the wage rate that they get, right? So they win, the startup win, and the investor win. So this becomes a more significant trend that I've observed in the market, especially emerging markets, that the next generation entrepreneurs view the market opportunity as an impact way to create, employment and also increase the wage. And I hope that this kind of trend can expand across other industries and verticals, not just edtech, but also health tech, fintech, and others as well. So that's just what I've seen as an example.
Peter.
Yeah, well, I believe that the biggest lesson for investors was that location is not that important as it used to be. And so remote investing is maybe not that nice and interesting and funny as face-to-face investing, but it's definitely feasible. So you can invest anywhere in the world, and startups especially can find investors anywhere in the world. So where it is becoming smaller, everything is faster, and it will never go back.
Great. With that, I got a ton of questions from everyone's intro statement. First one with Yvonne. It was very interesting what you'd mentioned about deals that before were taking weeks and that to close taking days now. Do you think that trend is going to continue with that process being shortened, or do you think it'll go back to the way it was? How do you see deals being done moving out of the pandemic time-wise or process-wise?
So personally, I hope it's slowing down a little bit, since it was very difficult, for me personally and for our venture firm to keep up with it. Corporate venture capitals are probably not known for being the fastest because there's a corporation behind, there are processes behind. So I hope it's getting a little bit slower, and I also feel currently it's slowing down a little bit, because we were all kind of running on steroids, and that's not sustainable. And so therefore, I hope there will be a little bit, and I also think I see the start of a little slowdown. But following on to what Peter said, it will not go back to before because of the democratization of the location. It doesn't matter where you are. Therefore, people are not flying around the world. They are not traveling physically or less physically. Therefore, there will be still a speed, or the speed of how people do deals will still be faster than pre-pandemic, because people realize that they don't have to go back and forth. The other thing, what also accelerated the deal-making process, was also that money was like cheap, money was ubiquitous, money was everywhere. And this is also, I see this slowing down a little bit because of, a potential depression, a potential burst of the bubble. Of course, the war does also something to it, and the sustaining of the supply chain crisis also slows down things. Therefore, I see all of it together, and also that money is probably not ubiquitous anymore, also slows down the deal speed a little bit.
Interesting. Does anyone have anything they'd like to add, or I have already the next question lined up for Jeep, if not? All right, we'll go to the next question for Jeep. Jeep, quick question. You had mentioned, ed tech and fintech being very hot. Do you see those trends with, telemedicine and all these things that really had that influx of capital, influx of interest a year and a half, 2 years ago? Do you still see there being that much interest as we move out of the pandemic?
Absolutely. Even in this country, 2 years ago, things have changed, right? You used to go check up in person every 6 months or every year. And now you can do it online. You meet the doctors online. And if nothing serious, then you don't have to go to the hospital or to the doctor's office. And this kind of trend also spread out in emerging markets. There are a lot of companies in Asia that see this coming, and they use this trend to get access or democratize, right? The word that we use here, access of the healthcare to people in the remote area who live in different provinces who actually never even had easy access. They had to commute 3 hours into the capital city and wait all day to see the doctor. Sometimes they didn't even get to see the doctor within a day, or just a simple health checkup. So healthcare, especially telemedicine, I think that this is kind of like a great wake-up call. And creative entrepreneurs see that this is the opportunity to carry it forward. In fact, when I see deals from Southeast Asia and from Bangkok, Thailand, at least 3 deals coming out of the region last year alone, it was all telemedicine in different shape and form, whether using simple smartphone to get access to connect hospital, doctors with people or populations in the remote area. Another company talk about how can we link different systems within the hospitals, among the hospitals, private hospitals and public hospitals, all together in a way that it didn't exist before. So these are the trends for development that I hope and I believe that is going to make our society more efficient and effective and truly democratize the healthcare industry.
Peter, would you like to add to that?
I absolutely agree, and we will see that especially in places like Africa, South America, Southeast Asia, really where you have big distances, and all the sectors can work much more efficiently, and that's a trend that will be here, and all investors will love to invest for sure.
Mm-hmm. And Peter, you had mentioned that with the pandemic, we are no longer geographically bound like before. Even with that, at least I've heard in the past, sometimes investors are kind of territorial. Silicon Valley investors are here, Boston investors are here, New York investors are here. Are investors now collaborating? Are they open to looking and working with other investors from different areas? Geographically, anywhere in the world? How are you seeing investors come together now to look at deals that might have changed from before?
I can't talk for American investors. I think most of the American investors still have quite a strong deal flow, so they don't feel like they have to go somewhere. But look on big VCs. The biggest VCs, starting Sequoia, starting others. They are all everywhere. They cover entire world already. So if you want to invest even in seed, why should you exclude somebody who is in different continents somewhere, but it's mentally close to you and you can do it? I see huge change definitely in Europe, where Europe is much more fragmented than the US. And investors are getting and starting to be much more open-minded. They consider investing in other countries without any problems. Also, even the teams, the founders are from different countries, and the place where they live. Quite often, people don't even ask, because So yeah, that's definitely changing. It's just comfort of investors that probably is changing more slowly than it maybe should or could, because it's definitely a huge opportunity. Somebody will use it, somebody will not.
And for the panel, before the pandemic, coming out of the pandemic, are there any different metrics that are being used when you're looking at companies, analyzing companies? Is there any change in the VC industry itself with what they're looking at when it comes to companies? anyone?
Yeah, I
Yvonne?
was thinking about this question, Sean, and first I was like, different metrics, maybe not, but maybe there are. Because one thing we figured out during the pandemic and also with some of our portfolio companies, there was a huge difference independently whether the product, the final product the startup is selling, whether this is more hard or more software. What was an interesting difference between companies was whether their product is robust to be sold online, virtually, or in person. Right? Because you can also have a hardware product which is connected and you just ship it and you just tell your customer to plug it in and the rest you can do over Zoom. If you are able to do that, and this works robustly also, without being hand-holded, then you are good to go. And with software products, it should be like that, without person sitting there and installing and whatever, configuring it. And so we realized some of our companies had a very, very good channel and funnel how to and where to sell their product virtually. They had a blast. Others were not prepared. And then it's much more difficult, because if we figure out in the middle of the pandemic that you need people on the ground in Korea or Australia and you cannot send them because of pandemic restrictions and current quarantines and whatever, then you are having a hard time. So your robustness to either travel restrictions or how you sell your products, I think that's key.
Jeep.
Yes. I don't know whether it's the pandemic that the KPI has changed, but I think in the last 5 years, ESG becomes really important, and it's the mandate, not just in a
Jeep, just to make sure everyone and all the attendees know, ESG stands for
environmental, social, and governance.
Thank you.
And this is the trend that basically a part of the mandate from the social development goals, which we call SDG, created by United Nations. And it is important because of the climate change, of the impact that we started to see in the society. So my point is, what I've seen in the last few years is there's a lot of push. You may call it pressure from private and public sector, whether it's venture capital funds, foundations, PE funds at the board level, saying that how can we use capitalism to mobilize the social change and environmental change? And I think that when we look at our startup portfolios and startup companies, at least, in my fund and also other funds that I've been working with, they asked the startup companies, okay, this is the expected financial returns. What about the impact returns? How do you measure it, if there is any? And I think that we are at the beginning of this discussion, sort of like the trend that's going to stay in the next 10 to 15 years, because everybody around here started to come together and look at financial return itself is not enough. It has to be some other type of returns, which is impact returns.
Peter, if you'd like to add to that, please go ahead. If not, I'll go right to the next question.
Oh, I absolutely agree. Again, Europe is a little bit different. Right now, we are adding defense as part of ESG because we have to, and I hope LPs will understand it again, because most of LPs have had their politics where no, you don't touch weapons, which has to change in Europe right now. So yeah, well, impact is understood a little bit different than 2 months ago or 1 month ago.
That was a very interesting insight. With that next question, throughout these last 2 years, there's been a huge exodus from Silicon Valley. I mean, personally, I know startup founders that have moved to Medellin, Colombia, to Miami, Florida, to pretty much all over the US, Puerto Rico, you name it. Now that these seeds have been planted outside of Silicon Valley and the entrepreneurs, they're going to continue, they're going to build companies. Do you think that there's going to be all these ecosystems that are going to develop in the coming years from this, outside of that Silicon Valley hub, but all these little pockets globally? What are your thoughts? Peter.
You bet. It's enormous growth in Europe and anywhere. Europe is so fragmented, and you don't know right now where the next unicorn is coming from. And it's wonderful to see all these cities, regions, countries that have their maybe much smaller ecosystem, but in the ecosystem you can find even wonderful companies. And they have means, being locally or be it remotely online, they have ways how to grow. The truth is that sooner or later, I think when the company grows, it will go to Silicon Valley or Miami right now, or anywhere in US, even from Europe. That's unfortunately the trend that we in Europe we have, and it's so natural, so it will probably continue. But definitely, I agree. I strongly believe that era of Silicon Valley is over. The Silicon Valley will still be strong, but it won't be the only place in the world where you can find VCs and startups.
Well, panels are always good when there's confrontation. Does anyone have a counterpoint, or would anyone like to add to Peter's statement? Jeep?
I'm still waiting for the exodus to be able to afford a home here. So I don't see the exodus. Sorry, guys. Of course, I see startups coming up everywhere, and there are more local, ecosystems growing in Austin or Miami or somewhere else. And of course, I love to see that, because the more people we have in this ecosystem, the better. We have more innovation, and also more useful innovation, and we probably have more money. I think the money is still something where Silicon Valley, I think, is still very, very strong. That's why many companies, many startups at some point decide to come to Silicon Valley and to go up and down Central Road. And this is probably staying. But I mean, I don't see, all other growing ecosystems as a competition or something. I just see it as a chance, and also as a chance for us to invest in other startups where they can leverage more affordable labor workforce, where they can open ecosystems in other countries where they have, great schools, and they're not fighting for talent so much as in Silicon Valley. So I appreciate that a lot from an investor's perspective, because this makes deals also, more reasonable in terms of valuation.
Jeep?
No, I don't have a counterpoint. I support both the panelists, and I like the last part about reasonable valuation. I'm just going to end it at that.
All right, then Jeep, we're setting you up for the next question then. Right now,
all right.
How is the ecosystem for venture capitalists, whether it's raising capital or just talking to their LPs, limited partners, the investors in the fund, what type of questions or concerns are the LPs having for the VCs? How are the VCs with their conversations to the LPs? What's the dynamics like right now?
Oh, I appreciate this question. I happen to raise funds before the pandemic and during the pandemic, and it's very interesting, perhaps maybe as an economist perspective here, right? Before the pandemic, a lot of investors, even sophisticated ones, they were actually a little bit conservative. They were scared because at that point in time, it was already 8 or 9 years in the trajectory of economic growth, right? And they felt that the recession is coming soon. They just didn't know when. And because of the expectation of a recession of some sort and form, they became a little conservative. They was like, oh, maybe I have to put a certain amount of cash or allocate funds into their other portfolios. They did not want to invest in VC, which is a different asset class, higher risk, right? And that was pre-pandemic, and nobody knew the pandemic was coming. During the pandemic, I was also raising funds, and I did it on Zoom. And I thought to myself that I should not set a high bar. We didn't know where this is going to go. So we had to realign the expectations with the LPs and whatnot. The LP came in and they knew that it was not as bad as they expected. And this is like behavioral economics. They said, well, now I see how this is going. I'm a little bit more comfortable handling the change and, the external shocks in the economy, managing their own businesses, allocating funds in different asset classes. So they invested in venture funds. And it turns out, amazingly, I raised more funds during the pandemic than before the pandemic. And I told all my partners that this is lessons to learn, right? It's about how investors really think, how can they handle their own business? And of course, it relates to the fund thesis that what are we standing for? Now, we know that the world is going to change, as we mentioned before, edtech, health tech, other sectors. And this is how we're going to utilize the fund and invest in particular sectors that impact the economies while generating promising or massive returns for them. And I think these are the trends that are coming. I know this is counterintuitive, but I thought it's interesting to share.
Yvonne, Peter? All right. Then question for the panel. With all the outside things impacting investments, impacting your portfolio, the companies you're working with, how is this great resignation that's in the news these days, how is that impacting your portfolio, your investments currently, and kind of the thoughts for, the milestones in the future that they're expected to hit possibly? Yvonne.
Yeah, I briefly mentioned this already. The war for talent becomes more stronger and stronger. So we get reports from our portfolio companies who want to hire, and all of them want to hire, they want to grow, that salaries in the Bay Area are going up like 30% at least, which is insane. And in some areas, I think it's even worse if you talk about data scientists, for example. So what we have to do, what our portfolio companies have to do, and we are as board members, we have to be very careful and very considerate whether the previous plannings they made on how much capital to spend on salaries, on wages, whether they can still reach their milestones with their plans or not, and whether they have to revisit their plans and their milestones and when they want to raise the next round, because that's a major impact which was not planned, not a year ago.
Great. Peter, could you please add? Or sorry, Jeep, I saw you go on mute.
No, that's okay. Peter first, after Peter.
No, thank you. No, I see the same, though it's not that huge rises in Silicon Valley, but it costs grows everywhere, and it's funny to watch actually. All these back offices, IT guys that can work remotely. When they start, they sit in one place, but they work for somebody in a different place. So their wages are growing globally. But still, that's the nice thing in Europe, that you have a cheaper place and more expensive places. So that can be, but lack of talent is global, and that's somewhere and moving around the planet. Doesn't help that much. How this will impact our startups? well, who knows? But so far, I don't see, because we are very in a very early stage. So I don't see that as a huge problem for our startups. But our startups are mostly, well, 10, 20, 30 people maximum. So when they still didn't grow to thousands of employees. But yeah, it will be tricky for them.
Jeep.
Yeah, I agree. And the way we go about it at my fund is we actually help the portfolio companies seed executives. Now, the question is, because the talents are so hard to find, and in the Bay Area, they were very expensive, how do we do it? So we look into what they really want, right? And also because of the pandemic, the demand or the lifestyle of engineers and management team and executive have changed. They actually want more flexibility. And so the way that we design it, for example, we actually retain maybe 50%, 30% of the key functions of the executive that the startup really need and match them. So that at least we can help startup move forward, reduce costs, be more effective. And because if you pay 30% or 50% of the time, of the executive's time, at least they can get going and the cost is not 100%. So we try to design the talent recruitment in a way that it serves the purpose of the lifestyle and while benefiting startup. And this is just an example, but there is a long way to go. The good news, maybe I should talk about the good news. The good news is because people work remotely, now you can deploy talent anywhere, right? If this is the type of talent that exists in, say, in Argentina, and the engineers are a little bit lower cost than engineers here, if you don't have to hire people in the Bay Area, Silicon Valley, you can do so in other countries. People are more accustomed to working remotely. And I think that this is a good trend to get talent on board as well as reduce cost.
And from the beginning of the pandemic till now, I mean, in the past, kind of deal flow channels were incubators, accelerators, angel groups, micro VCs, VCs, and there was this path that at the very beginning of the shutdown, a lot of the incubators, accelerators closed their doors, a lot of the angel groups stopped holding events. How is the deal flow channels for what you're working on, the companies that you get introduced to, how did that change? And what do you see the process moving forward out of the pandemic? And I stumped the panel. All right. With that, I'll call on Peter.
Oh, for sure. I was waiting for ladies, respect ladies first. So happy to answer that. It's everything is moving online, online tools, online meetings. I must say, we never had a stronger deal flow that during the pandemic and now it's still very good. So we don't look around just our house for companies. So it's you need to find online tools, for deal sourcing.
Yvonne?
Yeah, I agree on that, what Peter said. And I realized there was or is some kind of disruption, but more in the positive sense that because all the big accelerators and incubators went virtual, if you were able to get up at 3 a.m., you could go to any virtual event worldwide. You were not bound to Silicon Valley anymore. I could join accelerator or other, incubators, online meetings in Japan or in Germany. It was only a question of the pain you are taking because of the time zones. So I think this was and still is, and I think this is also going to stay a positive disruption in terms of what we talked about before, that So world is becoming like a smaller place in a good sense.
Jeep?
Agreed, 100%.
All right. And with that, just want to remind the audience that we are going to start opening up to Q&A in a little bit. So if you have questions, please prepare them. And another question for the panel. I mean, Peter, at the very beginning, you mentioned now defense is part of ESG, half joking, but half serious, I believe. Has what big national events are affecting your thoughts when it comes to investing? What things are you worried about, or what are you excited about for the rest of 2022? Either or. Peter.
Well, I'm huge optimistic, and I'm convinced that technology will change many things that we cannot even imagine. You know, all the many of, not all of them, all the problems, many problems we are facing right now can be changed by technology, and I am so convinced that Europe got the wake-up call here, and Europe will start investing much more in any kind of technology, because so last 20 years we've been just watching what's happening in the US and sitting in the back seat. We cannot do it anymore, you know. And that can be very big change for our entire world, because Europe still is not the number one player, but can become much more and much more important, and it's got huge potential with all these communities, small communities. So yeah, I'm very optimistic. Except for nuclear war, I don't see any danger that we cannot overcome.
Yvonne?
No, nothing really to add here.
Jeep, do you have anything to add, or should we go right into the questions from the audience?
So I hope that from now on, every single VC investment is going to be impact investment. I think it's time for us as a society to demand social return and environmental return on top of financial returns.
Fantastic. All right, first question from the audience. What are your thoughts about mindset necessary for innovation and entrepreneurship, and the ecosystem required to support that? Jeep, should mistakes and failures, should they be decriminalized, for example?
That's it's interesting that you asked this, because last night I just had a call with a few enterprise companies from Southeast Asia, and I happen to help contribute towards a 5-year economic development plan for the government of Thailand this year. And a quick history: Thailand is a little bit behind in terms of technology development compared to other countries like Indonesia, Vietnam, Taiwan, and Korea. The question is why, and the government asks, how we can actually help build the tech ecosystem. And if you read a book, which is a fun book to read, called Startup Nation, and it talked about the culture, right? Why Israel is developing much faster than Singapore. Two small countries, relatively about the same GDP per capita, great engineers, good talents, big government support, but why? And it comes down to the culture. So if you work with Israelis, and I happen to have Israeli bosses at Intel, they'll tell you what it is. Great ideas bubble up to the top. The hierarchical is really not there, meaning they want to hear your opinion, right? Everything is on the table, not a lot behind the back. So in Asian culture, in Singapore, it's different. People like to save face. They don't like failure, right? But sometimes it's the nature of learning of the startups on how we go through those kind of cycle and learning experience to really discover, right? A lot of business fails, and we have to accept that, especially if you want to start something new in the ecosystem. So that was some of the parts that we talked about last night, which happened to be your question today, that failure has to be accepted. And I think this is what makes Silicon Valley unique, that a lot of VC funds, when they interview CEO founders, they actually ask, what have you done before? Have you failed before? And if you have, what kind of learnings that you took to your current company so that you can make it forward, right? Steve Jobs failed before. He was fired from the company he founded. So these are the discussion and the culture that cannot be changed overnight, but sometimes it has to be discussed at the policy level as well as the private sector level.
Peter, Yvonne, would you like to add to that? Yvonne?
No, I completely agree. And being born and raised in Germany and comparing, German culture and German tolerance to failure in comparison to Silicon Valley, it's very, very different. And even though Germany is culturally, I think sometimes I think we are in between Asian and American culture in terms of, how braggy you are and how careful you are about losing face. But I see this a lot if I talk to German colleagues at Bosch and I introduce startups to them, and then they are Googling the CEO and they're like, well, the CEO failed 3 times before. And I'm like, yes, that's great, right? Because now he or she knows what to do right to be successful. And the Germans think, no, this person failed 3 times, this person will fail a 4th. But the thinking here is very, very different.
Cannot agree more. As Jeep said, this is one of the reasons why Silicon Valley had such a huge success. Seeing risk, seeing failures as something you should be ashamed of in Europe. It's a big burden in Europe, and it's everywhere. German, we are, these maybe except UK. UK is very specific as to, but the rest of the Europe. Failure is something bad, but as I said, as I'm optimistic. I see that changing. I see that I see that changing a little bit in your investors, and definitely see a rise of entrepreneurship around Europe, entire Europe. So I hope that will change.
All right. And we have another question from the audience, and then afterwards, I will go to the panel and just one final wrap-up question before we finish the event. But Jeep, question from the audience: can you go into a little bit more depth of the differences in telemedicine between the U.S. and that which you've seen in emerging countries?
The biggest difference that I've seen is in the US is still the center of innovation. So I work with UCSF Health Hub, which is kind of like the hospital and research as well. What we've seen here, it's more IP-based or research-based. For example, how can we deploy AI/ML, machine learning, to detect Alzheimer early? How can we use different technology to do disease classification, cell therapy, and whatnot? And these kind of IPs or know-how or knowledge base usually comes from universities like UCSF, Stanford Hospital, and also UC Berkeley research labs and centers. So I would say that the latest and greatest and the IPs are still majority. I'm not saying that emerging markets do not have it, and the majority of them are still here. In emerging markets like in Latin America, in East Asia and Southeast Asia, they actually took technology and they use it to democratize healthcare access. So it's kind of like a different spin on how they deploy it, right? So it might be, you can say, technology is created here, it's being successful here. Now it is being replicated and localized in Asian community or Latin community, or to a certain extent, Eastern Europe. So they use that, simple technology, cell phone, smartphone, camera, laptop, whatever they have access to those kind of devices to actually link population, doctors, nurses, healthcare, and whatnot with people who are in the remote area. So it's a different kind of innovation and how the technologies are being applied. So that's the biggest one that I've seen.
And question for Peter from the audience. Startups, tech companies from Russia, do you see them leaving? And if so, where are they moving, or what's happening in that ecosystem?
Well, that's tricky. First of all, yeah, they've been moving for many years, even before the Russians startups are all around the world. I just week ago, I talked to my friend who is based in London and runs a fund focused on Eastern Europe. He basically brings Eastern European founders and help them to do business in London. And he managed to move like 2 planes from Russia, at least two planes right before it was possible. So he was trying to get as many people out of Russia. Now it's not that easy to get out of Russia. So yeah, I mean, if they want to do some kind of business, they have to move out. That's for sure.
And Yvonne, what areas do you expect high growth, high impact, high returns possibly in the next couple of years? What sectors are really of interest to you?
I mean, I think the overall trend of digitalization will continue, whether it's in areas what Jeep mentioned, like healthcare, health tech, fintech, or edtech. I think industrial technology will also stay strong in this space. There is still a lot of things to improve and to optimize with the help of technology and digital innovation. And I also hope to see, and I also saw, at least money is probably there, a new climate tech wave. People are talking about it already for a while. There were a lot of funds which were raising the last year on climate tech, which I love to see, because I think that's just too important to let it go. And I think we as venture capitalists, we have even some kind of responsibility to really put money into this space, to help the entrepreneurs to save this planet and not to completely mess it up. I think that's very, very important too.
Perfect. And before handing over to Yvonne to wrap up, could each one of our panelists give a brief overview of what you're working on and what's the best way to learn more about it or to contact you? Twitter, email, whatever you'd like, website. Let's go around, starting with Jeep, then Yvonne, and end with Peter.
I like that you always call me first. Thank you, Sean. Joking.
You're just on my screen right there. That's
I see. No, what I'm working on is I'm working on impact investing. And this is, I practice what I preach. This is what I teach at High School of Business. MBA students these days, they sometimes they want to major in finance, but they don't want to work in investment bank. They want to become a VC. The world has changed. And so I told them that, if you want to become a VC, let's think about how we can use capitalism to mobilize the social change. And it became a curriculum that I taught, and this is the impact fund that I founded. So moving forward, this is the area that I hope that it can spread, and There's a lot of misnomers in the society that thought, oh, impact investing is nonprofit, but it's not. It's you deliver LP, financial returns to your LP, and you also create impact returns as an add-on benefit. And I hope, in what shape and form, this is the theme of my work, that I can continue.
Yvonne?
Yeah, thank you, Jeep. I love to hear that. I think we all have a responsibility here. So if you want to learn more about the fund I'm working for, we have a website, www.rbvc.com. That's Robert Bosch Venture Capital. You can reach me on LinkedIn. That's where I'm most responsive, or email. We do invest in all different kind of sectors which are close to the Bosch Corporation. This can be automotive, this can be climate tech, because we are strong in fuel cell technology and in electrification. But this can also be in other spaces like industrial consumer technology. And we also have some blurb about the areas we invest in and we are interested in on our webpage.
Great. Peter, let's wrap it up. Go for it.
Yeah, it's going to be busy year for me. We are constantly raising syndicates with other angels. We are just closing one angel fund, opening another fund on a yearly basis. So that's busy, and we start raising seed fund because there's a huge need and potential for a smart seed fund over here.
Fantastic. Peter, Yvonne, Jeep, if you'd like to put your contact information in the chat, or anyone in our audience, their contact information is in the sign up for today's event. And with that, my name is Sean Flynn. I really appreciate that I was honored to be the moderator for today's event. If you'd like to connect with me, my QR code right above me sends you to my LinkedIn. And also I put my LinkedIn in the chat right now. My focus is on mergers, acquisition, growth capital, secondaries. I'm at a mid-market investment bay. Please contact me. And with that, I'd like to turn it over to Yvonne to wrap it up.
Thank you so much. I truly enjoyed all the insights that the panel shared with us today. And please do reach out if there are any follow-up questions. If you can't get a hold of any of the panelists, please contact Carol or me, and we'll help you. Wanted to make sure that I thank our sponsors, because without them, nothing would be possible. So Singer Luwak and Silicon Valley Podcast. I appreciate all of you, and hope to see you next week at the Networking Happy Hour. Sign up and join us, and then have a wonderful day. Don't let the rain get you down, and we'll see you soon.